Thank you so much for joining us here on the Market Day Report on a Monday. I'm Marlon Boulding with you. We're going to take a look at your grain markets now that things are opening up on the day, and we're going to get a little expert commentary as well with Dewey Strickler. He's with AgWatch Market Advisors in Franklin, Kentucky. Let's go to the phones. And Dewey, welcome to the show. Appreciate that. Hope you survived the big game last night and are back up and at 'em today.
Yeah, I survived the game, and I am up and at 'em today.
Let's take a look at some of these early prices here in the grain. Now that we're trading, let's take a look at corn first of all, and we'll see what's going on. We did have an announcement this morning that Mexico bought 100,000 tons of U.S. corn for this current marketing year. It's not helping a whole lot. We have March corn down to this morning at 363 3/4. May down 2 1/4 at 368 1/2. Let's switch over to the soybean trade. We'll see how it's opening up. Right now, it's down 2 on the March at 865 1/2. May down 2 1/4. So we have July down 2 1/4 as well now. And a quick look at our Chicago wheat will show that we have that nearby March currently down 1 3/4 at 465. So if you had to combine everything in a nutshell here, Dewey, is this all just pre-report preparation for tomorrow, or what do you think here?
No, I don't think so. I think really what we're looking at here today is a case in which the market is trading honestly, and I'll qualify that in saying that you've got your stock market down about 240 points, your dollar index is up modestly, and crude oil's down about 70 cents, and all of this is weighing on the grains here. You've got your speculators. They're standing on the sidelines a little bit here. They don't expect any real big changes in the report tomorrow, but nevertheless, we're having a difficult day on Monday when you look at the outside markets.
Well, let's take a look at the U.S. dollar if we can. I know at last check it was a little bit firmer. Right now, the March is up 150 points. That's on your dollar index futures. So it stands at 97.200. That is firming up just a little bit. And on that crude oil, you know, overnight it was down close to $1 at times. We have the March crude right now on West Texas down 61 cents a barrel at 30.28. It did get as low as 29.57. So it is testing the waters down below 30 bucks once again. How hazardous would that be to pressure this corn market and the soy oil market if that would go back under 30 bucks again?
Well, I don't know that it would have a great impact. The only thing it's going to do is just keep traders that maybe want to dabble a little bit, you know, step in here and buy a little bit of grain. It just might keep them from doing that here for a few days anyway.
We can take a look at our ending stocks estimates for tomorrow. The USDA report will be coming out at 11 o'clock in the morning. Looks like they're looking at corn at 1.81 billion bushels, soybeans 444 million, wheat 946 million. What do you think has the biggest potential for a surprise in the market tomorrow?
Well, typically when you look at the February report, of course, they're not going to be touching the numbers here as far as production is concerned, and they're just going to be doing some modest tweaking here. I don't know if we really have any surprises to speak of. I would expect that the USDA could lower their export estimate on corn. They could lower it on a little bit on wheat as well, too. So as far as these ending stocks numbers, they might be just a little bit on the high side, but I don't know if they're going to be up here above what the highest guesses are either.
Interesting. All right. Well, Dewey, sit tight. I want to bring you back here, and we'll take a look at our livestock trade. Our special guest, Dewey Strickler with AgWatch Market Advisors. We'll be back in 1 minute, and we'll talk about the cattle and hog markets next. We are back with you on the morning edition here on the Market Day Report. We're going to take a look at the livestock trade right now. We're talking with Dewey Strickler of AgWatch Market Advisors, and he's based in Franklin, Kentucky. Now, as we look at the livestock trade, things won't be opening up on the futures here until the top of the hour, but in the meantime, we definitely had a weaker tone as we wrapped up the week. And do you think that's something that's going to spill over into Monday's trade here, Dewey, or what's the call today?
Well, I think we could open up a little bit weaker just for the reasons that you mentioned there. Also, we had a drop in beef prices late in the week, that's going to be a little bit negative. And then here, too, we got the outside. The financial markets are lower here, so that could spill over into a weaker opening here on the cattle.
That's a good point. In fact, let's take a look at those beef cutout values that USDA published last Friday afternoon. The choice cuts really did take a beating. They were actually down over $2, down $2.43 at $220.60. We had the selects down almost $2, $1.97 lower at $216.51. So that wasn't a very helpful sign, as well as anything else surrounding the futures trade. Now, excuse me, we had cash cattle trade on Friday, Dewey, reported around 208 to 210. In the, I guess you'd call it the central to northern plains region on a dress basis. But quite frankly, I haven't really heard of anything in the southern plains. Surely something sold. Did you hear of anything?
Haven't heard of anything. There may have been something that could have been late, but just not reported.
So, all right, so we're going to go with that, I guess, for the time being. 208 to 210 for your feedlot sales on a dress basis in Nebraska and surrounding areas. Now, I did see a few head that sold in Iowa at a few dollars higher than that, but it was such a few head that I don't know if you can actually really quote that for a trend at all. The trade was said to be fairly light. Let's go back and take a look at where we finished up on the live cattle trade on Friday, just so we know a benchmark where we're going to be starting out today. We did have February live cattle just under 136, so 135.92, April at 134.08, and June around 123.65. On the feeders, the launch point here will be March around 153.28, April at 153, and May around 152.50 when they get things rolling later on today. Now, we do have a cattle on feed report that'll be coming out a little later on this month. Is there any thought looking ahead toward that report anytime soon, or is that just so far over the horizon nobody cares right now?
Well, I think right now we got other things on the plate facing the cattle market, and that one will just have to wait.
All right. And of course, everybody's keeping a close eye as well on our carcass weights that are heading to the slaughter plants, especially after that winter storm. So we'll keep an eye on that, too. Let's take a look at our lean hog trade. Now, on the lean hog futures, we had kind of a mixed bag on Friday when the traders went home. We only had the April contract was up like about a nickel or so on Friday. Otherwise, everything was a little bit weaker, but is that something that you consider to be kind of a healthy setback or not?
Well, I think it could be. Technically, the hog market looks pretty good here. You had a higher cutout last week. That's a little bit supported, but we are starting to see supplies increase here somewhat. I think the cold and winter storm that's in the upper Midwest, that's going to keep a few hogs off of the market here, and it could give us a little bit of a boost above last week's high.
All right. Well, Dewey, thanks for the comments, helping us sort things out this morning. Dewey Strickler with AgWatch Market Advisors in Franklin, Kentucky. Pork carcass cutout values, as you can see on the screen if you're viewing at home, they were up about $1.05 on Friday with an average price of $77.57. We're getting ready. The livestock trade will open up in just a few minutes here.
All right, Marlon, thank you very much.